if you have price insensitive buyers and they're gobbling up all this Bitcoin, the odds that Bitcoin's price can stay depressed for a long period of time is pretty low. And so my expectation is that we are probably 60 days away or so. Let's say we're kind of at the beginning of May. You're probably going to see towards the end of June, sometime in July, we'll start hitting that 100-day period where it's 100 days after gold hit a new all-time high. And I would expect Bitcoin to really kind of start moving then. Doesn't mean it's going to like double or triple in price, but I would expect kind of the second half of this year to be very positive for Bitcoin.
Anthony Pompliano kicks things off by offering some much-needed perspective on Bitcoin's recent price action. While some investors might feel let down by what seems like slow movement, Pomp reminds us to take a step back and look at the bigger picture. As of early May 2025, Bitcoin is trading around $94,000, a huge leap from the $69,000 range we saw in November last year. That's a 36% gain in under 12 months, and an even more impressive 50% year-over-year increase. To put it into perspective, Bitcoin has not only outperformed gold's 45% return, but it's also left the broader stock market, which has turned negative, far behind. So if you're feeling uncertain, remember, zooming out tells a very different story. If you're finding value in this insight, make sure to hit that like button. It really helps more people see this content. Subscribe if you haven't already and turn on those notifications so you never miss an update. And we'd love to hear from you. What's your take on Bitcoin's momentum? Drop your thoughts in the comments. We read every one. Every view, like, and comment helps this channel grow, and we truly appreciate the support. Thanks for watching, and let's dive in.
Well, the price is going up. I think people just kind of lose sight of context. So if you go back to November 1st, I think it was last year, kind of right before the election, if I remember correctly, Bitcoin was trading at $69,000. Today it trades at $94,000. Pretty good performance for, less than a year. If you look over the last year, Bitcoin is up 50%, 50%. It's outperforming gold, which is only up 45%. And Bitcoin is up positive on the year while stocks are down. And so I do think people are so used to Bitcoin, ripping up hundreds of percent that when it is only up 50%, they're kind of disappointed. And so context really matters, kind of the comparable return. So I think that's kind of one broader story is like, hey, it's probably not as bad as people think it is. The second thing is if the price is staying stable at about $94,000, $95,000, which it pretty much has been since the start of this year, although there's been fluctuations up to 109 and down to 75, what you have to remember is that markets are just math, right? If there's more buyers than sellers, the price goes up. If there's more sellers than buyers, the price goes down. And if you think about already in just 2025, in the first kind of 4 to 5 months, we have seen exuberance. People, oh my God, Trump got into office. Asset prices are going to go to the moon. Everyone buy. Institutions coming in, sovereign wealth funds are coming in. Executive order for the strategic Bitcoin reserve. All good, positive, green buy, type things. Price went up. Then all of a sudden, tariffs, sell everything. The portfolios are going to be crashing. Just get dollars, get treasuries. Oh no, fear. Everyone starts selling assets and price goes down. Stock market went down 20%. Bitcoin went down to 75K, right? Like that emotion shows up in the price. But where we are today is basically where we started the year. And so what we have seen is we saw institutions and also public companies buying at highs. We saw them buying at lows. We saw them buying everywhere in between. And so what you actually have is you have price insensitive buyers now in the market, which really the retail audience has historically been. But you're seeing that same activity come from public companies as an example. And so if you have price insensitive buyers and they're gobbling up all this Bitcoin, the odds that Bitcoin's price can stay depressed for a long period of time is pretty low. And so my expectation is that we are probably 60 days away or so. Let's say we're kind of at the beginning of May. You're probably going to see towards the end of June, sometime in July, we'll start hitting that 100-day period where it's 100 days after gold hit a new all-time high. And I would expect Bitcoin to really kind of start moving then. Doesn't mean it's going to like double or triple in price, but I would expect kind of the second half of this year to be very positive for Bitcoin. And so what, my take to people is just, you see a bunch of people buying. Obviously, you can do the math on how much they're buying versus how much is coming into the market every day. It's pretty good odds that Bitcoin's price is going to be higher in the next 6 to 12 months. Calm down and do what they're doing. If they're dollar cost averaging into Bitcoin and you're taking your foot off the gas, that's not good. You should be dollar cost averaging into Bitcoin as well. And I think that you'll end up in the same trade that they end up in. And that's where returns are going to be captured over the next, year or so. It's the reason why he's always liked cash flowing businesses, right? Yeah. Is he understands how inflation works. He's a smart guy. And yeah, of course, Bitcoiners love to yell and scream at him because he said some inflammatory things about rat poison, all this nonsense, whatever, right? But you also got to remember Warren Buffett's a showman. In the same way that the Bitcoiners are out there being showmen, the same way Elon Musk is a showman, Warren Buffett is too. He's a performer. When he gets on stage and he sits there for hours and he's answering questions and everyone's like, oh, look at like the old grandpa with the comedic relief. Like he's putting on a performance, right? And it's a certain audience likes it. Warren Buffett can sell out stadiums because his performance is well accepted. Same thing with the rat poison, whatever. He's playing to his audience, right? More power to him. Don't hate the player, hate the game. Now, what he's saying is true as well. He's very smart. He understands how the economy works. He understands that money printing is a massive issue. And so if that is the case, then Warren Buffett's choice to how to insulate himself from the problem has been to buy cash flowing businesses for less than they are worth and then hold them for a long period of time. That has produced since 1965 a 5.5 million% return. Since 1965. So again, I'm not a mathematician,
I said 55,
but
65.
1965. And so what did I say? 55, 65. It's 1965. And so if you go and you look at that, that's about 60 years, 5.5 million% return. Bitcoin in the last 14 years has delivered a 2.5 million% return. So Bitcoin has been compounding at a much higher rate. Now the question is, if Buffett's compound annual growth rate over the last 60 years is 20%, what is Bitcoin's going to end up being? And also, you don't have to sit and analyze companies or do private deals or do any of the stuff that Buffett had to do. People can just go and buy Bitcoin. So right now, the compounding annual growth rate of Bitcoin is something like 80%. And so if you're compounding at 80% and Buffett's compounding at 20%, who's going to end up actually gaining ground? Obviously, the Bitcoiners are. And so I'm not claiming that any of the Bitcoiners or Warren Buffett, I don't want to take away from his track record and the success that he's had. But I am saying that the next Warren Buffett is probably not going to look like the old Warren Buffett. Right? The next one is probably going to do something that was different.
Shifting to the macro landscape, Anthony Pompliano highlights how broader economic forces are shaping today's market. He points to the lasting effects of Trump-era economic policies, which continue to ripple through the system. Now, just a few months into the new administration, we're already seeing the results. Tariffs, strategic energy moves, and shifting priorities are shaking things up. Markets have felt it. Stocks are swinging wildly, and Bitcoin's been chopping sideways. But it's not all doom and gloom. In fact, some key indicators are showing signs of real improvement. One standout, inflation. According to Truflation, inflation has dropped dramatically from over 3% in December to below 1.5% by May. That's a huge shift in just a few months. Got thoughts on inflation, Bitcoin, or the new administration's impact? Drop your take in the comments. Let's get a conversation going.
And if you think about Benjamin Graham, Warren Buffett, these guys all pioneered something that most people hadn't done previously. And so now what you're starting to see is people are saying to themselves, wait a second, there's an asset that is compounding at a very aggressive rate. It benefits from the exact same things that Buffett is calling out here. It is a new generation's chosen way to express this quote unquote trade. Whereas the boomer generation, overgeneralization, but the boomer generation chose to express that trade via the Berkshires of the world. Neither one is right or wrong. It's just on a comparable basis moving forward for the next 10 to 20 years. Who's going to outperform? I'll take Bitcoin over Berkshire all day long, especially with Buffett not at the helm. And that's why you saw Berkshire stock sell off. So the other thing no one wants to talk about, Berkshire Hathaway is the boomer meme coin. I've been saying this forever. People get all upset about it. Well, we got proof. Ha. I was right. You want to know how I know? Because when Buffett announced that he was stepping down, the stock traded down. The stock traded down 6%. So I used to say that 5 to 10% of Berkshire's market cap was the Buffett bump, the Buffett premium.
But you know that.
Okay. So if, again, you go back and go look at the tape, Berkshire Hathaway, 95% good company, 5% Buffett meme, right? You can call the premium a meme. Tesla, maybe it's 50% good company, 50% Elon meme. Then you go to something like DJT. It's like 5% good company, 95% Trump meme. And then the Trump coin was like 100% Trump meme, right? And so it's a variation of all this stuff and people get upset about it, but it is obviously true. Buffett, his, the original finance influencer was able to create this entire, kind of aura around him and the company and all this stuff, which he should have done. He should be celebrated for it. It's excellent. That is what somebody should do. But still, we finally got the proof that there was a Buffett meme that was baked into the stock price. And with him stepping down, the stock price traded lower and that Buffett meme is now going away. The data on February 1st Nothing you did affected that data, right? Well, what about on March 1st or April 1st or May 1st? At some point, you got to take responsibility for what the data is saying, right? And if you have very kind of polarized economic policies compared to your predecessor, then you're more responsible than not, right? And so I don't think anyone's like, the stock market is down because of anything other than kind of tariffs, economic policy, et cetera. So the question then becomes, is it worth it? Right. And I think that the current administration is saying, yes, it is worth the short-term pain because there's all these benefits they're going to get. I tend to think that they're right, but I think that's kind of the way to evaluate it. So I would argue that we now are getting closer to this being a Trump economy, right? And a Trump stock market and all that kind of stuff. When does it switch over? I don't know. I don't think there's like a single date, like, okay, it switches, but it feels like, all right, we're a couple months in. Obviously, there's been these economic policies that have been implemented. They're having an impact on the market. Like, we're getting closer to it. So if you then go and you say to yourself, okay, let's take a look at what's actually happening in the economy. Jobs are getting created. Now, I'll be the first one to say, I don't believe the jobs number ever. The jobs number is nonsense. But directionally, jobs are getting created. How many? Who knows? But jobs are getting created. The second thing is that inflation has fallen off a cliff. It was at over 3% according to Trueflation in December. It's now under 1.5%.
But isn't that bad? Like, don't we need a little bit of inflation?
Well, 1.5%.
Well, yeah.
Right? The Fed's target's 2%. The last guy put it to over 9% in the official numbers while he was, not paying attention. And so 1.5% is better than 9. And so why is it going down? Well, certain food prices are going down. Gas, huge part of people's day-to-day expenses, that's been cratering. Again, administration came out and said that, the gas is like $1.98. That is some places in America. There's people that are on Twitter who like, I went to my local gas station. Here's $1.98, blah, blah, whatever. But with that said, I think most people are paying more than $1.98, but it is less than they've been paying for the last couple of years. And so if you look at this stuff, you say, okay, this is all like the economic data points. If you look at the sentiment surveys, people are saying how worried they are and all this stuff, but people are buying in the market. And so it goes back to this idea of you can listen to what people are saying, but you have to watch what they're doing, right? And what they're doing is different than what they're saying.
Despite the positive data, sentiment surveys are still flashing bearish. Why? Because emotions lag reality. As Anthony Pompliano points out, that's one of the timeless truths in investing. He reminds us of a simple but powerful principle. Watch what people do, not what they say. And here's what they're doing. Institutions are buying. Public companies are allocating, sovereign wealth funds are stepping in. The smart money is positioning, and that should make you think. If your approach is DCA, dollar cost averaging, and you're playing the long game, this might be exactly the kind of environment you're built for. Don't just scroll, take action. Hit that like button, subscribe for more insights like this, and turn on notifications so you're always in the loop. Got your own thoughts on market sentiment versus reality? Drop them in the comments. We're all here to learn from each other. And don't forget to watch our other videos on the channel to dive deeper into the world of crypto and investment strategies.